Right now, Gen Z's average credit score is dropping faster than any generation in history. If you're under 30, your financial future might be slipping away without you even realizing it. According to a Fortune article from March 26, 2026, Gen Z's average credit score has dropped 15 points in just the last year. That's the steepest decline of any generation. And FICO reports show delinquencies among younger borrowers have skyrocketed by 40%. So what's causing this freefall? Three main factors. First, Trump's student loan crackdown has left millions with sudden payment demands they can't afford. Second, inflation has squeezed budgets to the breaking point. And third, credit card reliance has become a dangerous crutch. Let's break down the student loan piece. Under the new policies, if you miss just one payment, it gets reported to all three credit bureaus immediately. Before, you had a 90-day grace period. Now that safety net is gone. One missed payment can drop your score 50 points overnight. Here's the critical question. Are you making the same mistakes? If you're using credit cards to cover basics like rent or groceries because your paycheck doesn't stretch far enough, you're playing with fire. That 30% credit utilization rule, most Gen Z borrowers are hitting 50% or more. But here's the good news. You can stop this free fall. Step 1, contact your student loan servicer immediately. Ask about income-driven repayment plans. Many borrowers don't realize they can cut their monthly payment in half just by filling out one form. Step 2, tackle that credit card utilization. If you're carrying a balance of $5,000 on a $10,000 limit, you're at 50%. Your goal? Get below 30%. That means paying down to $3,000. Even small payments add up fast. Step 3, automate everything. Set up autopay for at least the minimum on all your accounts. One late payment stays on your credit report for 7 years. 7 years. Automation removes that risk completely. Now let's talk about a secret weapon, secured credit cards. If your score has already taken a hit, these require a deposit of, say, $200. That becomes your credit limit. Use it for one small purchase each month and pay it off in full. This rebuilds your payment history fast. What about those who say, I'll just ignore my credit score? Bad idea. A low score doesn't just mean higher interest rates. It can affect your ability to rent an apartment, get certain jobs, or even secure insurance. This isn't just about debt. It's about your entire financial identity. So where do you start today? First, pull your free credit reports from annualcreditreport.com. Look for errors. 25% of reports have mistakes that hurt your score. Dispute them immediately. Second, calculate your total debt and make a payoff plan. Even an extra $50 a month makes a difference. Remember, this isn't about perfection, it's about progress. If you implement just these 3 steps, student loan adjustment, credit utilization control, and automation, you can stabilize your score within 90 days. And from there, the rebuild begins. Now I want to hear from you. What's the biggest credit challenge you're facing right now as a Gen Z or younger borrower? Drop a comment below. Let's troubleshoot this together. And if you found this helpful, hit that like button and subscribe for more credit strategies that actually work.